We have witnessed some of the most insane price action of 2023 to date. Bitcoin saw a significant rally to 30,000 as a result of more banking fears. However, this didn't last long as Arkham issued a warning that Mt. Gox and the US government were selling Bitcoin. This resulted in the price absolutely plummeting from 30,000 to 27,200. Since then, that news was deemed to be false and the price has recovered significantly. This whole ordeal costing investors over $200 million in liquidations in that last 24-hour period alone, some of the most volatile price action we have seen. In today's video, we're going to be going a step further, looking through the manipulation, discussing what has happened, what the price action is doing, how this has impacted the macro, and what we expect to occur next. Let's get into the video. Okay guys, welcome back to the channel. I hope you're all having a wonderful day today. We're here to talk about Bitcoin on the short term and of course the macro. Bitcoin has seen an incredibly volatile last 24 hours due to the reasons discussed in the intro. We have seen massive swings upwards and massive swings downwards, resulting in hundreds of millions of dollars worth of liquidations. In today's video, we'll discuss it from a technical and structural stance, talk about the next move and of course the key levels to be watching for these continuations. Before we get into it, smash the like button, hit the comment button, and of course guys, subscribe to the channel. We do daily videos on Bitcoin, focusing on the charts, the data, the technicals, no BS, no emotion, no hype, pure raw TA. If you're interested in more of this content, you can find us on Telegram, the second link down below. You'll get access to charts, updates, analysis, exclusive analysis, news events, all of our videos, educational posts, and so much more, guys. If you're interested in our VIP channel, you can go ahead and contact me via this message here. You'll get access to two groups, our main VIP channel, and of course, our group chats. You can find our entire trading track record over here since February 2021. Of course, these two groups are of course exclusive to our VIP members. We post entries, targets, and stop losses for exclusive analysis and so much more. Again, all of the information can be found over here. Let's go ahead and get stuck into the video, guys, starting off with the market data currently for the month. Wow, insane stuff. I did not even notice that. $351 million in liquidations, guys, in 24 hours. Absolutely wild stuff. I can't remember the last time we saw it this high. Actually, a few days ago we saw it close to this, but 351 million, up 350%. We have seen absolute brutality, absolute carnage occur in these charts. And again, guys, I do warn everyone, when we see absurd amount of volatility, when we see these manipulations occur with news-driven price action, I generally take a step back and wait for it to blow over. I know that our edge in the market is not there, or at least is not good enough when we do have this price action moving more volatile and more importantly driving based on news events. We definitely try to take a step backwards. 24-hour volume is up 131% to 185 billion, and we are up 2.46% for the month, but of course we do have a few days left, so it's very interesting to see what happens. The key number for the month is of course 30,000. We do need to get that closer, but 30,000, anything below that doesn't matter. So I don't really care if Bitcoin closes green in April. What I do care about is if Bitcoin closes above 30,000 or not, and we have about 3 days left in the month to find out. Volatility index hasn't changed much, 2.06% on the 30, and for the 60 we're sitting at 2.92, so pretty much no change in the volatility index. But due to the rapid volatility in the last 24 hours, we're most likely to see that spill over into the 30 and 60 day, and we should see these start to rise again. Looking at liquidations here, guys, you can see the absolute carnage. We have seen both longs and shorts absolutely destroyed, guys. We saw $189 million worth of longs destroyed, and we saw $129 million worth of shorts destroyed. Of course, we saw a significant push upwards, followed by a crazy pullback, guys. And again, this move upwards was exhausting this entire time from about here onwards. We were seeing exhaustion. Every pullback occurred a few percent, not even a few percent, got deleted and pumped back up. Something suspicious was occurring in the price action from here onwards. It looked like massive orders were coming in to fill these support gaps to push the price higher artificially. It's almost if these news events were planned time. But definitely something to keep in mind, guys. The news was released right over here, which is very suspicious considering this is a major trigger zone and resistors, almost coincidental if I don't say the least. Anyway, we saw the news released and the price completely plummeted, wiping off every single entrant into the market within this range, entering into late longs, pushing the price down all the way, deleting this entire rally that occurred over the last 48 hours, all the way back down to 27,200. Since then, again, that news was deemed to be fake, resulting in a push back upwards. So we have seen a bit of push and shove in the market in the last 24 hours. That has resulted in, again, like I said, both longs and shorts being absolutely brutalized, pushed around, and just pulverized in general. Not a fun time to be in trading. But either way, guys, we're going to analyze the markets. We're going to talk about what's going on. So let's get stuck into the DXY. DXY is very much holding its current support. Again, its current support is going to be at a horizontal range, as you can see by this red box. This is a 1 year long support level. Very important it does hold. If it doesn't hold, we are going to see the stock market and Bitcoin continue upwards, okay? If it does hold and we do bounce, we will see the stock market and Bitcoin likely pull back again. They are correlated, but like I said already, as we approach bottoms, as we bounce from bottoms, which we're doing now, as we're flipping macro trends, which we are trying to do now, we see Bitcoin perform or overperform in correlation to the stock market. That doesn't mean they're not correlated. They have a higher volatility index, and therefore assets with higher volatility index generally have more expressive moves when we come out of these macro downtrends into macro uptrends. They move faster, they recover faster, and they gain greater percentages in comparison to other asset classes. So definitely something to keep in mind, guys. The Bitcoin cryptocurrency is definitely correlated to the stock market because they are tied to the US dollar. The correlation isn't a direct correlation, it is a correlation via the US dollar, and the US dollar is, of course, inversely correlated to both stocks and cryptocurrency. To say Bitcoin is detached from the stock market is impossible. It can't happen. All it can do is it can expand its correlation. It can become less correlated, but it can never be an independent asset because it doesn't work like that. In the economy, all these assets are tied together by the US dollar, tied together by external factors. Anyway, let's go ahead and talk about this. So if we do drop below, we can expect the markets to rally. If we do push above, we can expect the markets to pull back. Again, they are inversely correlated, and the driving force of what the DXY is going to do will be determined by the economic news that will be coming out quite soon. Let's scroll up and take a look. We have quite a fair bit of economic news. You can see over here in May, we have the interest rate decision on the 4th of May. We have, of course, the Fed press conference on the 4th of May. We have NFP, we have unemployment, we have CPI, we have month-on-month inflation, we have PPI, so many influences, so many economic data pieces of news that is going to impact the direction of the DXY. So from a technical standpoint, I'm not too concerned. Looking at what happens there will determine the narrative. The narrative will shift. If the Federal Reserve announces that they're bringing interest rates down even more, or they're pausing interest rates like some countries have done, that is going to be bullish for the markets. Of course, falling interest rates or pausing interest rates result in debt becoming cheaper, and if debt becomes cheaper, essentially it is cheaper to invest. It's cheaper to take loans to invest like companies do. A lot of companies acquire assets on debt, and that becomes cheaper for them, and their service ratios decrease, and asset prices not only rise, but companies are more willing to invest. Not only that, but that debt service ratios for individuals, for families, for consumers decrease. They have more available cash to invest. And again, this takes time to occur. Again, a lot of this in the economy is lagging, so it does take time for that ball to start rolling. But again, the markets are not the economy. The market front runs this economic data. All we had to see was perceived systematic risk drop, meaning the expected pivot was eventually about to happen, and the markets would have rallied. We've been saying this for a long time. We said all the way at the bottom, guys, we said that we do not expect the Fed to pivot. We do not expect the market to rally when the Fed pivots. We expect the market to rally well before the Fed pivots. All we need to see is an expectation of a future pivot, and that will result in the markets rallying. We did actually see that occur. Let's go ahead and finish up on these and we'll get into Bitcoin. So again, S&P 500 and Dow Jones dropping down on the second day candle over here. We're seeing a bit of a pullback, around 2% on both asset classes, coming down, retesting their necklines of a resistance right over here. Again, these are the key levels we do need to break over to see any sort of continuation upwards. If we do break over these levels, we can target around 4,300. Until then, we are looking for a slow, steady downward move to around 4,000, guys. Uptrending support line. Again, a lot of this is going to be influenced by the economic data. Again, the economic data completely can change the narrative, change the bias, change the direction at a drop of a hat. Keep that in mind. Same thing goes for the Dow Jones over here, guys. Not going to go over it. Let's go ahead and jump into Bitcoin. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. So like we said, guys, we have seen a whole heap of volatility, and we're going to go ahead and talk about the short term, the macro, and the technicals today. So let's start, guys, on the higher time frame, then break it down. So higher time frame right over here. Again, nothing really much has changed. And from the higher time frame, we're very much still sitting around in this high time frame uptrend. We're sitting around in that high time frame neckline resistance, 28 to 30,000. We haven't really made that directional break on the macro scale. We're sitting between a high time frame uptrend and a macro uptrend. We're on that tipping point where we're trying to decide whether we're going to go into a macro trend or whether we're going to get a reversal and rejection to come back down and retest their lows and then continue upwards. So really quickly, our green levels, these are our major supports, okay? Our red levels are our major resistances. The reason why this level is still resistance, even though we saw deviation above, is because we haven't got the monthly close above. This is a 1 year long resistance. A yearly long resistance requires a higher time frame confirmation. Therefore, we need a higher time frame close above to validate that this level has been broken. So for a yearly resistance, we look for a monthly candle. For a monthly candle, we look for a weekly candle. For a weekly candle, we look for a daily, etc., etc. Again, time frame doesn't necessarily confirm breakouts, but what it can do is if the price remains above a specific level of confluence or resistance for an extended period of time, what it can reflect that the price actually is consolidating healthily above that level of resistance, and therefore the probability the upward continuation is greater than a downward. So the time frame itself doesn't really matter. We don't really care about the time frame. It's just a general guide for confirmation and verification. But what is important is how the price action responds to the move above. And so far, all we have seen is deviation above, and therefore this is still resistance. The 30,000 resistance is very key to flip the macro trend, as we can see by the 4-year cycle. We're not going to get into the 4-year cycle too much today, but as we can see by prior cycles, this solid red line over here, every single time we clear that solid red line being the local absolute low of the prior bull run. Okay, prior bull run, local low, bull run top over here, guys, bull run top, local low. Every single time we close a monthly candle above, that is when we flip the macro trend upwards. That is when the macro trend officially flips upwards. Until then, we're still in this reversal phase. It's a reversal rally from the bottom of Bitcoin. And reversal rallies are not bull runs. We can see reversal rallies in the first bull run, or first bear run, should I say, was around 125%. In the second one, the reversal rally was around 80%. And of course, in this one so far, we're seeing around 90%. So reversal rallies are not bull runs. They are uptrends, but they're not macro uptrends, and they're definitely not bull markets, guys. Like we said, we do need to see 3 points of verification for our bull market to technically be in. A bull run is not something we can throw around. It's not a random word. There are actual things we need to see to actually confirm we are on a bull run, and breaking above 30,000 is one of them, but we need to see all of them. 30,000 is one, the local first dead cat bounce high, 48K, date range trend, Ichimoku cloud, and of course, like I said, the date range trend, we need to see that Bitcoin cut in half as well. So there's a few things we do need to see actually occur, guys, for our 4-year cycle bull run to actually initiate. But 30,000, very significant. Moving back, guys, the uptrend is still very much intact, and the uptrend remains intact until we lose 24.4K. Remember, this entire time we flipped bullish in this range. We were bullish at 18,000. We bought at 18,000. We sold up over here. We rebought down at 18,000 again, and then we were also buying at 16,500, and we also bought at 19,200, or wherever that POC breakout was. I think it was around 18,700 to 19,200 for late entries into the market. We saw a significant rally, and we sold at 30 30,000. Until then, guys, we saw this was major resistance, this turned to major support, we made a local high, major resistance, and now this level here is going to be major support. As you can see, the uptrend is very much still intact until 24.4k is lost, and therefore every single pullback that occurs should be considered a healthy pullback until 24.4k is lost. That is when this current uptrend is officially over, guys. That is when the uptrend is over. If we break above 30,000, we're going to clear this high and the uptrend is going to continue. We'll talk about that on the short term. Let's do a quick TA, guys, here, and then we'll get into a short-term analysis and then wrap up the video, keep today's one a little bit shorter, and then we'll get into it again tomorrow. So as we saw from a TA point of view, we saw obviously a nice base of support on the Gaussian channel. We saw a Gaussian channel upper band act as a decent support. We said if we drop into the upper band of Gaussian channel, that is a very strong confirmation that we are going to continue through it. And thankfully enough, we didn't drop into it. We actually bounced on it, and that sent us back up to 30,000 to retest that 30,000 level again. However, 30,000 is now acting as a pretty strong resistance, and this Gaussian channel is going to be acting as a pretty strong support. Along with the Gaussian channel, we also saw the 50 EMA, we'll bring that one up in a second. The 50 EMA act as a decent support on the daily too. You can see the 50 EMA, this red line, act as a nice strong support. This is very, very close to the Gaussian channel upper band again, acting as a decent support, but also a zone of confluence or a point of which the strength of the trend will flip. If we want to see this uptrend lose strength on the daily chart, we need to see the Gaussian channel and the 50 EMA break. If we see the Gaussian channel and 50 EMA break, that is going to be a very strong sign. The price is going to continue down to retest 25.2 to 24.4. We'll also talk about that on the short-term time frame in just a moment. Let's go ahead and bring up some more indicators such as the RSI and of course the market cipher B, guys. Some really powerful indicators here to discuss the price action. Market cipher B and RSI. Here it is. Okay. Wrong one, my bad. Sorry guys. Market cipher B. Okay, so these are momentum indicators. They tell us what the price action is doing, more importantly, the strength of the price action, velocity, speed, and of course, volatility. As we can see, we did see a nice strong pullback on the volume over here, on the volatility, on the momentum. That resulted in a bearish divergence. That bearish divergence played out, and we saw a strong pullback, around 12%. So that bearish divergence has now played out. However, the shifting point in momentum is still very much in play as we are still in a downtrend. This is weakening momentum still, okay? We are still actually having a daily weakness in momentum. Therefore, we do have a significant amount of selling pressure / resistance above us. This trend is still technically weakening as per the momentum. What we need to see is the RSI push above this trend line. That is going to result in a flip in momentum, a bullish flip in momentum, break that downtrend, shift towards an uptrend, and of course that is going to give Bitcoin the momentum it needs to break over 30,000. If we see this occur, plus a break over that local high, break above 30,000, that is going to be confirmation the price is going higher. If that occurs on the monthly scale, I will consider rebuying my Bitcoin. Until then, this trend is still weakening and we're definitely still watching that. Okay, guys, we have printed a green dot here on the daily, but I do not want to take these into consideration too much because a lot of this price action here was as a result of heavy manipulation. And again, with heavy manipulation, it also does influence the technical data we see on the screen, as it is not by any means immune to price manipulation. So we are keeping that in mind. We'll have to look at the short term. Let's go to the 3-day and then we'll go down to the weekly and then the smaller time frame. As we can see, guys, on the 3-day price action, we see very much the same thing. We still do see weakness over here. We see the market OB coming on down. This is suggesting we have positive weakening momentum. We have positive momentum because we're above the 0 point. Therefore, this area is positive. We have weakening momentum as we do see the market cipher is dropping. So we have positive weakening momentum. Same goes for here with the RSI. We have general weakness in the momentum. So we have positive weakening momentum on the market cipher B. We have weakness in momentum right over here. We have resistance at the 30K range. We have a retest of 30K. The short term starts to break down. If we start to lose a Gaussian channel on 50 EMA on the 1-day chart, the probability is that we do continue down to around 25.2 to 24.4 is actually relatively high. So right now, I am not very bullish. I'm still very happy I sold at 30,000. I expect a retracement still. until proven wrong. Until this $30,000 level line breaks, until momentum flips higher on the higher time frames, I still expect a pullback to occur. I'll be discussing that. Now, it doesn't mean that I'm not trading longs. I've definitely been trading longs. I made $17,600 today trading along on Bitcoin, but it is an overall higher time frame bias. And this overall higher time frame bias can be completely thrown, shaken, spun, flipped, and changed based on the economic data that comes out. Keep your eyes on that. Let's get into the short term and talk about the next move for Bitcoin, because that is what is important today. So, short-term price action, we saw craziness occur, guys. Absolutely insanity. We saw an absolutely perfect retest of our lower support. As you will know, this lower support is the level that we need to break below to validate that continuation down to 25.2. We have the Gaussian channel right over here. We have the 50 EMA right over here on the daily chart, guys. This is going to be the level we need to break below to see a continuation down to 25.2. Not only do we have the Gaussian channel 50 EMA on daily, not only do we have a horizontal support over here, we have a huge gap in the VRPV right over here, signifying an area of low resistance. Okay, if we have an area of low resistance, we need low volume. If we have low resistance and low volume, that equals we will have high volatility. If we have high volatility, we have high speed of price action, and we see rapid moves. Okay. So the speed of price action will increase under 26.8. If we lose 26.8, expect the prices to go lower. Until then, we have to see breaks of these levels. 30,000 still being that key level. We break above 30,000, we enter this range of consolidation again. Again, the trigger point for a continuation upwards is going to be this upper point on the chunk of the VRPV. A break over 30,475 will result in a retest of this local high. A retest of this local high is going to be the point at which we need to break upwards to invalidate the bearishness that is developing on the daily chart. Remember, I always said we have weakening momentum, we have weakness in the trend. To invalidate all of that, we need to see a break over this blue line. Okay, if we break over the blue line, we're also going to see the RSI inevitably break this trend line. We're most likely going to see Bitcoin close a month over 30, and that will send the prices much higher. So keep your eyes on that. Until then, we are just ranging. We are just ranging between. Let's talk about the range between. Let's talk about the next move, guys. Let's go down to a really small time frame. Let's go like a 5-minute chart and let's take a look. So again, a lot of volatility, and it's very hard to predict exactly what is going to occur here because of how much influence this news has had on the market and how much late entrance we have, how much money we have flowing around, how much liquidations we have. The price is very jumpy, very spiky. So the best way to do it, guys, if you're looking for predictions, look for these higher ranges. When we break above these triggers, like we said already, when we break above these trigger points being the highs and lows of resistances, we expect the prices to continue. We break that trigger, we continue. We break this trigger, we continue. We break down that trigger, we continue. We break down that trigger, we continue. We break down that trigger, we continue. Okay, and we can go on and on like this. Trigger points are incredibly important because they represent points of shifting in the strength of the trend. They enter different phases of volume resistance. Okay, if we break through these high resistance ranges and we have positive momentum and volume, the price will continue. And we break down and we have positive momentum and volume, we do continue as well. It's very, very clear stuff, guys. So you want predictions, look at those ranges. However, the smaller time frame, it does appear like we have developed a rising channel formation. So we'll go ahead and draw that out. A rising channel formation being two parallel increasing trend lines, and this is a bearish structure. If we had to go from a measured move perspective, the rising channel formation, if we do break down from a measured move perspective right over here, guys, we take the high to the low, we drag it to a breakout point, that is going to take us towards this level here. However, this is when it becomes tricky because directly below us, we have support. So right now, I still would not be looking to take too many entries. We still have too much confluence of chart, still too choppy. But if we do go from a measured move perspective, we can expect this price to continue back down unless this level here is reclaimed. Unless 29,000 is broken above, I would still have a short-term bearish bias. By the time the video is out, maybe this has changed. But until then, I would expect a short-term bearish bias for the price to continue back downwards, guys. From a technical perspective of a 5-minute chart, we can see we are sitting above the 50 EMA. However, we're underneath our uptrending support line. So we've lost our uptrend. However, we do have a degree of strength still in the charts, and therefore we haven't actually lost all of the momentum and all of the positive strength that we did have within this uptrend itself. And therefore, the possibility for a fake or a false breakdown is still there. Lose that 50 EMA, lose those peaks on the BRPV, and we will start to see more weakness, and then the probabilities of continuations downwards will start to spike. Until then, be very cautious trading this, because I am definitely going to be very cautious trading this today. It's not an environment I like to be trading in, especially when there's so much volatility. 15-minute chart, again guys, we can use this RSI as a good tool. Drag that RSI across, we can see where the momentum trend line is. If we break over this momentum trend line, that will be a good indicator the price has regained its positive momentum on the 15 and will likely push higher. Again, our trigger points have been defined, the key levels of resistance have been defined, the short-term possibilities have been defined, but do not get caught up in this 5-minute chart today, 10-minute chart, 2-minute chart. Look at the bigger picture. Zoom out a little bit, guys. We have a lot of economic news coming out. We have very clear and definable ranges. You do not need to catch every single move. I've been saying this to you guys. A trader's mindset and investor's mindset are very different. A trader doesn't care what happens to the price when he's not in the market. A trader only cares about what happens to the price when he's in the trade. If you concern yourself with concerns of an investor as in a trader, you're only going to be emotional. Okay, guys? Focus on the trades you're taking, focus on the actions you do, focus on the price when you're in, when you're not in. Do not worry if the price moves up and you're not in it. Do not worry if the price moves down, you're not in a short, because every day is a new opportunity for a trader. You do not rely on the price being a certain price. The actual price of an asset has absolutely zero concern to you as a trader until you were in it. As an investor, it does. And that is what I'm saying. If you have an investor's mindset where you do concern yourself the price of an asset and the changes in price of the asset when you're not in it, because it costs you opportunity, and you try trade, you're going to get emotional. So drop your emotion, define what you want to be, a trader or an investor, and then align your focus and align your biases, align your narrative of a price action towards that so you do not confuse yourself. Thanks for watching, guys. Hope you have a great day and see you guys tomorrow.